It's the best of times on Wall Street. It's the worst of times on Main Street. 65% of all consumers living paycheck to paycheck. As Shauna said so well at the top of the show, delinquencies expected by the Fed, 14.3% in the next 90 days. Before COVID, it was only 7.1%. Consumers can't afford to get groceries and gas. And while spending has been strong in some retail, it's strong in food retail like Kroger and Costco, Walmart. It's good in off-price, TJX, but it's weak in category dominant. It's weak in home, it's weak in furniture, it's weak in sporting goods. It's weak in department stores, it's weak in electronics. So the consumers, it's weak in dollar stores, it's weak in chain drug, closing thousands of stores. So the consumer's telling us, regardless of whomever wins the election, the consumer's cautious.
Do you think that's because there has been a shift in what the consumer is valuing right now, what the consumer is prioritizing in services spending versus goods, and a lot of that indexing towards experiential spending as well?
Brad, an important point on experiential, and it's like Scylla and Charybdis, the proverbial Greek mythology. So there's rocks on one side and cliffs on the other side. The rocks on one side is gambling, so the consumer experience in gambling, a lot of lost money, that's coming out of retail. But on the other side, experiential is more popular than ever, but not at Disney, because Disney is price prejudice against lower income shoppers, so it's raising prices every year once or more. So not Disney, but everywhere else, to your important point, for experiential, still winning, still heroically, to your point, supporting the economy. They've had hundreds of thousands of union workers laid off in retail trades, in manufacturing. The UFCW, the Teamsters and the Bakers, and our U.S. Department of Labor Flickinger-Millay study have lost 400,000 jobs since President Clinton left office. Kroger is the only company adding jobs, 110,000 jobs. And what's interesting, Brad and Shauna, is government subsidies to Walmart, the wealthiest family in the world, Jeff Bezos, the wealthiest man in the world, Costco, Aldi, and Target, close to $10 billion to put unionized workers out of business. And the union workers we've interviewed across the country, the FTC with draconian divestitures and trying to prevent the Kroger-Albertsons CNS merger, the FTC is putting more union workers on the street. So instead of getting checks for $5,000 to $7,000 in retirement benefits, they're getting checks for $100. So they can't spend at retail. 3 generations of workers, Grandma McCormick, single mom Denise Pritzi, her 3 children who've worked 70 years in union stores get less than nothing because the FTC has created bankruptcies of 40 leading supermarket chains along with chain drug, and the pension plans that are secured by unsecured loans are going to blow up if this Kroger-Albertsons deal doesn't go through. So the taxpayers, in addition to subsidizing Walmart and Amazon's build-out, the taxpayers are going to have to subsidize the billions of underfunded, not paid union members' pension plans, and the workers know this. They're losing their jobs, they're losing their unionized employers, they're unionized their stores, and they're mad at both parties, and it's going to sort itself out, but not in a good way.